What's going on, guys? So today I'm going to be going over the trades. It's been a pretty boring market, 4-day week, pretty tough. But let's review them because it's very important to review every single day what you do right, what you do wrong, and yeah. So QQQ's been in this whole entire loss of progression from this bear gap, right? We got a really strong, nice sell through this whole entire range, uh, kind of all starting from this bear gap that was unfilled over here that kind of broke structure, right? So what I mean by breaking structure is um, higher, low, and then continuation higher, followed by a failure. They liquidate everything and then they sell it back down into the support, and then they break it down with an overnight gap beneath the support, and then it starts failing previous higher lows, right? So you would look at it like this is a previous higher low range, it failed it, and then you started to get the breakdown followed by these 3-day gap type kind of thing going on over here. That led us into these unfilled left behind bull gaps, right? We fill those, we put in a footprint candle, and then we find a higher low within the end log of that certain week, right into Thursday data. And then Thursday data then pushes us higher, gaps us up, and then grinds us right back into the level. We reclaim above the level, start pushing through the bear gaps. Now we're getting up to the last bear gap aside from the one that's is all the way up here, right? So basically, it's one big potential weekly lower high if you look at the weekly. Okay, so I mean, there's not really too much that we could deal with, like kind of analyzing what's going to happen from over here, rather than just simply waiting for uh, the one side to give up, right? And that was yesterday, right? We took this thing down right through all of these series of lows into this bull gap, and then we basically filled it and just pushed directly beneath it and just held it like a champ, right? So whenever I'm looking at the gap down followed by the continuation higher throughout the whole entire morning with no big volume, 10 a.m. data was something where I think it kind of initiated a little bit of upside, at least into the overnight gap. We start basing the overnight gap, but all we're really doing is pushing into where the gap kind of was, where the day closed off into where the gap was created at, right? So when I'm looking at this and I see the rejections kind of happening and the volume kind of drying up into this range as we move our way up here, I'm looking for a short, right? I'm just looking to short the first initial lower high because I think typically with what happens on days like this and price action like this is that you get to sell climax. So we have data on Friday. We have either Thursday or Friday. So whenever we're looking at this thing and it's pushing its way down, right, and then it gets a nasty sell, the first little rebound here, guys, especially with data end of week, is not going to be the one that reverses it. It's going to get typically another lower low, or it's going to get a higher low being put in, and then it's going to go something like boom, claim back above the certain levels, maybe dip back down, and then start building out higher lows and then mark its way back up higher, right? But that's not the case here. What the case is just a simple, very basic retest into the gap range. And then whenever you're looking at the names that are driving the market higher, we got really nice relief within NVIDIA today. That was actually driving downside within the sell-off that we seen yesterday. So today, when we're looking at this, it's the same general concept here, guys. This is a messed up wick, but when you're looking at this gap, here's the gap. Okay, mark the top of the gap if you want. Mark the bottom of the gap. There's the bottom of the gap. And when you're looking at this thing on the 5, that's all it's really doing, right? So it closes the overnight gap. It gets a nice little leg right off of the open. And then once you get into like the 15 and the hourly looks of this thing, it's just consistently rejecting the gap, right? It rejected 110 psych to a T, and the volume kind of dried up, and then that's whenever we started to see a bearish order flow kicking a little bit more aggressively over here, right? So this was just a simple lower high, a base, really no room for continuation higher. And yeah, this needs a little bit more chop, a little bit more digestion, a little bit more of I would say another lower low. However, you can't really see the fact of this thing gapping down and then grinding its way higher on minimal volume through this whole entire range. It's just not going to happen. Um, so Apple had the same general look. That's whenever I shorted Qs. My risk tolerance on Qs was pretty much just going to be um, I entered over here, right, after I started to notice the sellers start to come into the market, and then I was just looking for a lower high. I got the lower high, and then I sat through the trade for such a long time. Basically, what the risk tolerance was here, guys, was just short position. Basically, an entry here, stop above the high, push down into like the opening print range, push down into the orb range, and then we started to hold it, right? So I was like, you know what? This is only about a 1.7 or like a 2 hour trade. I'm going to look for more towards the opening print or just like this higher low that initially was put in right off of the morning session. Okay. And then my risk was kind of just above this high. So it's about a 3.5 hour trade, right? It ran about 40% at most. Not a bad trade, not a great trade. Netflix, I still own Netflix. Like I said, not something that I absolutely love, not something that I absolutely hate, but whenever you take a look at the weekly, it's just looking like these higher highs are incrementally kind of being sold. It looks like they're going to give up some give up some gains here because they're running out of steam, and it's right back into the previous swing high, right? So whenever you find the trap, the failure, and then the strong sell right afterwards, and then potentially a loss of the earnings candle high, then I think the next target could be 663.22. Whenever you look at the risk to reward with that target being in mind, I mean, I shorted it all the way up here yesterday, risk above the high, and then or risk the opening print if you want. Either or doesn't really matter. $5 to $7 stop, target the low of the gap. It's like almost an 8 hour trade, right? I also did have a little tiny bit of exposure to MPC today, but I let go of that and I didn't really care about it. This one was kind of just it's just basically it's going on my radar more and more and more. I never got a full fill on it, and I'm kind of glad I didn't. But I really like this one. Whenever you take a look at like the daily chart, it's a double inside bar. The volume could definitely dry up here, and then this could finally start to see some upside. Obviously, this was kind of a thesis that tied in with like tech getting sold off on, but the leading sector within the whole entire like defensive rotation was the consumer trade. I also took C. C was a really nice one. I've been talking about the fill of this gap for a very long time, right off the 62 spot. Technically, the actual gap fill off the gap print is 63.28, but I don't want to use that level as like, oh my gosh, okay, I gotta wait for that. No, I don't. I want to catch the trade. It's a really nice trade. And then what my thesis was kind of revolving around was potentially JPM giving up a little bit of gains. Very overextended ever since the August 5th bottom that the market put in. And then from there, what happened was we kind of got this just like low volume float higher above this predominantly seller dominant range where this is all pretty much just pure distribution when you look at the volume patterns behind it, right? So whenever I'm seeing how the seller kind of just absolutely disappears for a little bit, typically what that leads to is then distribution continuing at price discovery after a nice breakout, after a really nice strong trend that looks like it's not stopping, and then what you get is just like an immediate knife. Sometimes you'll get news if the seller wants to continuously incrementally sell his position and until the point where he's fully out. There's a bunch of shit that could happen like that, right? So I'm just looking for these names to kind of go up their ground, so I could go take a look at the relatively weaker name. This is the preliminary distribution, the preliminary resistance range. What happened after that was we tried to break above, test, and then go with like a nice little support resistance. Resistance turn into support. Next thing you know, we start to fail the range, and then that's whenever we get these nasty gap downs on heavy volume, really showing the distribution, and then we started to get a diminishing volume kind of move higher back up into that gap that looks structurally weak, right? So I would pretty much say that I think this thing sees 59.28 before it could even see up into this range. I shorted this today. If you want to take a look at the 15, what I did was, it was a nice support that was established in this tight little range from over here, 61.18. And what I did was I kind of just shorted right beneath the level after I started to notice how there was absolutely no buyer present off the support from over here after he was kind of there to defend in the morning, and then he kind of went away after that. So I mean, it's a decent trade. I realized a little bit on the shorter expiration. I have further expiration looking for the target down into here at this was my initial target right here. That was a bad voice crack. But yeah, so what happened was we're testing into this range. We filled the gap down here, and that's where we actually put in the low a day off of. If you go into like the 15, it's a very perfect gap fill into a nice bounce. However, I kind of want to see this thing just get aggressive in terms of like I want to see selling get a little bit more aggressive. I want to see it pick up until this thing fills this gap all the way from over here, right? So I'm looking for like 59.70 to 59 like 30. If you want to take a look at the risk to reward on this short, it's kind of like an entry up here. Basically was just kind of like risking a little bounce. I guess I could have been risking the opening print if you're looking at like something like this, wherever the opening print's even at. And then down into here, we'll call it like right here. It's a decent little 6R short, I would probably say. All right, so I like it. And then other than that, guys, there really hasn't been anything. So I took the QQQ short. I could have took Nvidia. Nvidia was another thesis as to why like I was trying the QQQ short. If you guys can see from right over here. Typically what happens is whenever you get a gap down followed by like a low volume move higher and then that seller reappears above the gap from that was established from yesterday's close into today's open, that's whenever you will start seeing like some reversals happen within some names. And that's exactly what the case was right over here. I was looking for the Apple bid to pull for my short to go a little bit better, but this was a really nice NVIDIA chart where the bid absolutely just completely disappeared and was pulling or was spoofing any sort of bigger order. And then we had an aggressive order off of 107.60, 107.84. It was a 15K lot, which was bigger than the rest of the size within the tape. And then the sellers were just consistently eating away from the buyers. If you go take a look at 107.50, that was actually at 235, right? So if you come right over here, yeah, so this was already putting in a lower high, and then it was kind of trying to move its way lower, and then this is whenever the seller started to get a little bit more aggressive, and then yeah, we closed towards like the opening print again, like right down into here. Um, so that was kind of just all I was really looking for. A decent little trade on Qs, nothing too crazy. Basically caught it from like right about here down into here. Right up the 360 psych was almost like was basically the target. At most it was like a $3.75 move. Not anything crazy, like I said, but the risk was probably like this, $1.34. So it's about a 3R trade. Like I said, nothing I could get too worried about. Um, and then everything else was kind of just terrible. I did miss Tesla today. Don't really care though, because it's a short week. It wasn't really too expected. This chart doesn't even look that great right now, to be honest. I mean, you get moves like this all the time in Tesla, so it's not something that you could always read. But these are just some of those charts where it's been a very dispersed name within the tech sector for a very long time, and it was just starting to outperform the market within July. And then we just kind of pulled back down into this May reaccumulation after this massive markup on a ton of volume, right? So this was ending the rotation for a little bit within Tesla. I think a lot of people wanted out, wanted some profits on that whole entire run, and then it's kind of just coming back down to collect more inventory that's sitting within this range, which is a larger picture, larger perspective type of like rebuilding of positions, a range where that would actually happen at, right? So um, trading the structure after you see these things could be decent. So yeah, that is about it. Um, Yeah, there's nothing else for the day.